Hello traders, today I'm going to be talking about gamma exposure, this one right here, BTC gamma exposure. I'm going to show you guys how you can use this in a profitable trading strategy. Now before we go into this direct indicator, I'm going to give you guys a bit of the background on what is gamma. Gamma is the rate of change of delta of an options contract. I am not going to get into the weeds of exactly, option Greeks and delta and gamma, because this video is not for just option traders. This video is more of a sentiment video where you're going to use this tool, if you so choose, to trade Bitcoin. So that's what we're going over today. So in order to do that, what we're going to be looking at here are two main forces. We have retail traders and we have option dealers, also known as option market makers. What tends to happen is retail traders might do very similar actions. So here's an example. Let's say that a lot of retail traders start buying calls. Well, who are they buying calls from? Because there's a counterparty to every trade. They're buying calls from option dealers who are now short calls. What does that mean? Well, that means that if price rises, then those option dealers are in trouble because they're going to get hurt by a price rise because they are short call contracts that will lose money as price rises. So what they need to do is something called gamma hedging. And that's what we're going to be looking at today of the BTC GEX right here. So the most important part of this is this right here. When this value is a high number, it acts as a brake on market price. When this value is a low number, it acts as an accelerator to the market price. And why this happens right here is very important. This happens because of option dealers who are hedging their gamma as the underlying price moves. So let me show you guys exactly what I am talking about on the 1 day of Deribit. I'd also recommend only looking at Deribit because it is the largest open interest with options. So let's go look at GEX, just independent of price. When this value is very, very positive, what that means is that any price move that's about to happen is likely going to reverse. Because here's basically why. As options get more in the money or more out of the money, basically gamma is going to get more negative. As options get closer to at the money, gamma is going to get a lot more positive. And a quick look at what that looks like is right here. This is gamma. So as you can see, if we have an options contract right here, and price begins to go away from the at the money, from the strike price, then you can see that gamma is going to decrease, but gamma will increase as we're at the money, okay? So what does this mean? Well, this means that if the majority of open interest has been left, meaning that if most traders who open options contracts open them right here, and this is where the bulk of open interest is, and price is way far away, then gamma is going to be very, very negative. Let's say that nothing's happening, and the open interest is near the current underlying price, then gamma is likely to be very, very positive. So what that means is when gamma is very, very positive, option dealers need to take the opposite position of where price is going. So let me show you guys exactly what that means. So you can see that gamma went from about negative 7,000 up to about positive 11,000. And look what happened to price. As price was beginning to rise, option dealers began to sell more and more because you can see the gamma was still positive. They sold more and more and more until gamma got negative. These are option dealers who are hedging their gamma in real time. Now, what I think is more interesting is when gamma is very, very negative. This is exactly what happened on GameStop. GameStop was actually a stock that had a lot of negative gamma. Why is that important? Well, look at this right here. When GEX is negative, it acts as an accelerator to price. Watch this. Price was beginning to fall right here. I think we can all agree. Gamma flipped negative. Flip from positive, GEX flipped to negative. Right when gamma began to flip negative, it's going to act as an accelerator to price, and it did. Price tanked right here. But gamma was very, very negative, which meant that option dealers were basically at a price point of way here or way over here. Basically, their gamma was very, very negative, and if price went in any direction, they would have to hedge against that very, very negative gamma, okay? So what ended up happening is something pretty interesting. Price began to rise, but gamma was still negative, right? Gamma is still negative, and then look at this. Price jumps like crazy, a few $100s all of a sudden, probably because a lot of deribit option dealers had to buy, because negative gamma acts as an acceleration to price, as you can see right here. Then something really interesting happened as well. Price began to increase, but gamma was very positive and was getting very positive very quickly. So what the option dealers had to do is to sell Bitcoin in order to basically to get their gamma as close to zero as possible, net zero exposure. So really what you have to focus on is just because gamma is positive does not mean price will fall. Just because gamma is negative does not mean price is going to rise. That's not what's happening here, guys. What's happening is when GEX is positive, it's a break on market price. And the reason for that is if the gamma exposure is very, very positive, i.e. price is where a lot of open interest at the money strikes are, then those option dealers basically need to trade against the market, which is going to cause the market to reverse. But as price goes farther one way or another, those option dealers are now unhedged. And in order to hedge, they need to take the direction that price is going, i.e. these two rules right here. So the GEX is just a really wonderful indicator that I'm surprised I've never talked about. I find it super, super helpful to use this on when the gamma flips. You can also use this when gamma is very, very negative or very, very positive. Very positive would mean reversal likely. Very negative would mean you're probably about to see some volatility because any price move is going to cause a lot of option dealers to have to hedge and to trade in that exact direction. But the really interesting thing about this is look how good these market makers on options are at keeping their gamma around zero, as you can see right here. As we get closer and closer to expiration, their gamma is getting better and better and closer to zero. Because these guys do not want their gamma up here or their gamma down here. They want it around zero. And there's a lot of ways that we can trade this. Another way that we can take advantage of this is to look for a zero gamma level. Typically, when gamma gets to zero, what has happened is we've gone from positive gamma to negative gamma, or negative gamma to positive gamma. And this typically indicates a level of support or resistance, okay? So if we look at that here, we can put on the price, but when gamma flips, right here, we went from very, very negative to very positive all of a sudden. Price just kind of didn't do much for a long time, as you can see. Yeah. There are a lot of different ways that we can trade this, and I don't really want to get into all of the more intricate ways like using gamma exposure by expiration, but just know that this is a really good indicator for telling you when a reversal is likely, i.e. the GEX is very, very positive, so option dealers have to take the opposite side of the current market trend, or when GEX is very, very negative, where options traders have to hedge their gamma by taking the trade of wherever Bitcoin's trending, they have to go that way. And you can see this happening in real time on Deribit with traders of futures and of spot, that these guys have to do these specific actions in order to basically not get wrecked. So what we can do is if you have a constant eye on BTC gamma exposure and you know what you're doing and you know these rules here, then you can basically predict where price is going to go based on certain price movements, i.e. when price rises on a negative gamma a little bit, you can expect price to probably rise a lot, because that little bit of price move is causing, basically, I'm going to show it one last time and then we'll get out of here. That little bit of price move higher is causing gamma, as you can see right here, to get more and more negative, which would require the option dealers to buy more and more calls, to buy more and more Bitcoin futures long, and to buy more and more spot in order to get their gamma back to positive right here. So it's a lovely indicator, the GEX, and if you want to learn any more about trading this, I'm going to link these two in the description below. But beyond that, I'm really happy to be using this, and I find it to be very helpful. But yeah, one last thing is a gamma squeeze did happen on GameStop, and I would not be surprised if this happens on Bitcoin as well. So definitely keep a big eye out for very negative gamma. If that ever happens as price is rising, it's a pretty strong sign that price is going to explode higher. With that, happy trading and go gamma hunting.